Okay, this panel is very critical because we stand between you and lunch. And look, we have expanded, all right, the panel. And I think essentially it's because we want to go deep in this panel. And you know, all of you were amazing in your in how you stayed with us in panel 1. And panel 1 was emphasizing on how important it is to have a champion, the leadership role of both the management team, the board, as well as people believing and all coming together because we want to build better for the banking sector. Now, the ecosystem is not complete if we don't include a lot of other technology partners, and because none of us can be as fast as the speed of technology. So there's no way we could do everything in-house. Even how much we want to be integrated from end to end, we still need to play with many different players. And I love the question earlier about how do I strike a balance? I want a balance between business as usual, and yet at the same time I want to be innovative. And in my role, all right, currently I'm no longer just teaching in the university. I'm actually working with many family-owned businesses, and they are transitioning from one generation to another. So the second and the new generation want to drive change. And the incumbent first generation don't know enough of digitalization and decarbonization. So the new champions are the next generation. I'm looking at a lot of the young people in this room. And you feel very frustrated sometimes because you know that the purpose is to make the world more green, more sustainable, and to have younger people come on board. But how do you prove to the incumbent and the older generation? So what I have on this panel is a mix. I'm actually having technology innovators who are driving change within their own company. And after they saw the results of the change, they can then boldly step out and say, I now have a solution to attract external, all right, customers. Because once you are able to prove to the board and to the incumbent generation that you create value and that you can make money, it speaks louder than all the words. So the proof of the pudding in transformation is value creation. And that's the theme of this panel. So you could tell I'm very passionate about this because we don't have a lot of time. Asia needs to move fast, and Asia is so diverse. And I'm not just talking about ASEAN. So I'm going to start the ball rolling again. You've already known Dr. Kirida and Prof. Chin, so they don't have to do that self-introduction. But I do want you to be up close and personal with the new members on this panel. So can we start then with Matthew? Quick introduction, all right? And then we'll come to the meat of the conversation. Yeah.
Good morning, everyone. It's an honor to be on this stage. Thanks for KSI and Tan Sri Michael for inviting me to this stage. So just a quick intro. So Ping An One Connect, or One Connect rather, we are the Fintech arm of the Ping An Group. You know, Ping An Group has 27 subsidiaries, largely organized into 3 pillars. Most of you probably heard of Ping An Insurance, one of the largest insurance company in the world. We have more than 700 million internet users, almost like half the Chinese population. But a lot of people actually might not have heard of Ping An Bank, which is obviously the centerpiece today about technology in the banking world. So Ping An Bank is also not a small bank. We serve more than 130 million customers. So asset size amounts to 750 billion US dollars. So quite a large bank in China. Actually, for your information, as a group, we own 8% of HSBC globally. So we are the largest institutional shareholder of HSBC. Now, I belong to the 3rd pillar, which is technology. So my mandate is trying to commercialize all the good technology that utilized by either the Ping An Insurance arm as well as the banking arm. So today I'm going to talk more about the banking arm, how we commercialize that technology that we use ourselves. So that's us.
Thank you very much, Matthew. Guy?
Sure. It's quite weird listening to Matthew because I think we have a very similar role. So my name's Guy Shepherd. Thank you for inviting me here today. So a little bit about me. I'm a former banker, a former police officer in counterterrorism. I have about 16 years in financial crime. And after I led financial crime for SWIFT, for Asia Pac for 8 years, one of the reasons why I left my home of FinCrime to move into technology was my frustration at a lot of the outdated controls that cost a great deal to banks but don't seem to work very well. So now I work at Aboitiz Data Innovation, which is very similar to Mr. Chen. Our function is the machine learning and data science arm for the Aboitiz conglomerate. The Aboitiz conglomerate is number 4 in the Philippines, big in banking with brick and mortar, rural banking as well as digital, and very big in power, everything but nuclear, and everything else we refer to as smart cities, which is construction, manufacturing, recently aerospace, and I think we're now going to distribute Coca-Cola in the Philippines. So somewhat varied, and we in effect act as the engine room for the great transformation for our group. And similar to Matthew, my chief job as our commercial officer is identifying use cases that we think are special and we can replicate in the external marketplace, as well as what we have already deployed within our own companies.
Thank you very much, Guy. And for a lot of you in this room, I have to mention this. Guy graduated with a Bachelor of Arts in English and Medieval Literature from the University of Exeter.
Yes, it's a very useful degree.
Yes,
in case any of you are thinking of reading it. It's very
right? So I want to let you know, technology champions need not always come from a technology background. Okay? So keep that in mind for all of you who think that you must know how to code and you need have to write, all right, data. Raja, lovely to have you here. And I love it that you are actually appointed the CEO of ASEAN Bank. Tell us about yourself.
Assalamu alaikum. Good morning, everybody. I have been a career banker for 30 years. I know I don't look it.
Look,
no, I
see, if you are in banking, you look as young as her.
No,
Can we clap?
no, I started young, prodigy. So I'm now tasked to build Malaysia's first Islamic digital bank. And the shift wasn't sudden for the last 10 years. I've had my share of frustration of transformation from within. I can also empathize how challenging it is to transform from within for many reasons, especially banks in Malaysia, because we are not in trouble. Our margins are still good. And you know, there's no real push to make that change. Although my fear is one day, you know, some of us may end up with that Kodak moment. So this one chance of a lifetime to build something from scratch was something I couldn't let by. So we are part of the ASEAN Group in Japan, and as you know, ASEAN Group is a huge conglomerate. We're one of the largest banks in Japan as well, but the digital bank in Malaysia is the very first digital bank for the entire ASEAN Group. So the mandate goes to, for us, is to, with transformation, and more importantly, for us to build our own technology, and for us to own our own IP. As you know, most banks are vendor managers.
Good. And we will come to that for the next round. But again, I cannot resist letting you know that Raja Tay graduated from the University of East London with an LLB, so she's a lawyer by training. All right? So I love all this diverse background, yeah? Henry, all right, you are true tech, so therefore you.
Hello, very good afternoon, everyone. Yeah, my name is Henry. I'm a co-founder of a company called Microcures. We started 23 years ago from Kuala Lumpur, Malaysia, but we are currently also operating in 12 different countries around the region. It's always good to be back in such an event, of course back in KSI event as well. Thanks for having me. Thanks to Tan Sri for having me as well. I think Macrocur's position is in the sense that for the past 23 years, we have been using our technology and our solutions to basically help companies to acquire, grow, and retain customers between the digital economy. And of course, currently we have over 5,000 enterprises utilizing our solutions and services. Both very small ones, small enterprises. We have also very big enterprises like banks. We have, for example, in the Philippines, we have some of the biggest banks utilizing our solutions. We have also very inspiring digital banks, even in Malaysia, utilizing our solutions as well. So yeah, we hope this session I can share some thoughts about digitalization. But again, like Professor Annie mentioned, right, digitalization technology is no more just a technology man thing. It's really something for everyone and anyone. Thank you.
Very nice. So I'm going to go with the first round, yeah? And again, I'm going to start with Matthew and Guy, because you have some similarities, yes? Can you kind of walk us through, even though you are doing change from within the organization, I'm sure there are a lot of challenges, yeah? So walk us through, how do you do that transformation of Ping An Bank, all right, from the One Connect perspective?
So these days, obviously, you can't talk about technology without mentioning AI. So I'll start with that. How did we actually, our AI journey in Ping An Bank, how we actually apply, especially people talking about generative AI these days, right? It's almost like you can't talk about it unless you talk about AI. Our journey, AI journey, actually started 5 years ago, exactly the same time as OpenAI. So after the 8, Google AI scientists published the Transformer, that's how we actually started our so-called large language models, exactly the same time. But we took a very different journey from, for example, ChatGPT, which in our view is very, what's the word? Very generic. We actually start our journey with what we call BERT. If you're in this space, you will know what I'm talking about. Bidirectional encoder versus unidirectional decoder, because we believe that in the banking world it's very prudent. You cannot allow any sense of hallucination, also if you know what I'm talking about. So basically you cannot allow AI, for example, in a call center, answer the phone to start to BS, right? If you know what I mean. So we believe that because we have a lot of data. We have 35 years worth of banking data, which is private domain data, right? So unlike ChatGPT trying to learn everything that is to learn in the internet. I will come to the moral compass in a minute. That's also a very important topic. But for now, just for now, talk about the accuracy, because in the banking world, you cannot allow anything that is not accurate. So we try to train AI using our own private data in every single role. Just to give you a stat, if you call up Ping An Bank in China, call up the call center, there are 87% probability that you'll be talking to AI. And the next one is very interesting, without realizing you're talking to AI. So yeah, you think you're talking to a real human being, but it's not, because it's learned every single product that is learned, every banking product, from credit card, mortgage, high purchase, secure, unsecure, because they have very, very different kind of dialogue to conduct. You need that domain knowledge. So again, unlike a lot of AI, so-called EKYC, I'll talk about as well, out there, they are very focused on cognitive, eyes can see, yes, mouth can speak, and ears can hear. We're trying to focus more on the domain, the brain. So bank is a specialized domain. So 87% call center. So I just want to maybe just give very briefly, give two real life, very layman terms, example how we apply. The way I see it, most of the so-called AI application in the bank so far, maybe other than your bank, is a lot is focusing on so-called EKYC. I mean, you look at, if you ever done that, right, that journey is very siloed, right? You look at your phone, you put your face in the frame, you do the face recognition. The next step, you do OCR, which is really, you're trying to scan your ID, right? And usually it doesn't matter where you go, indoor, outdoor, there's a glare. And then you have to somehow, tilt your phone at an angle, because otherwise you will not capture the ID card properly because of the glare. And if you try, you drop out. And then the last, you have to do that very silly, we call active livening test. You have to nod your head, blink your eyes, open your mouth. I'm sure you have all done that. We're trying to do it differently. We're trying to do it in the video call, which obviously customer will consent. So it doesn't matter what kind of account they're applying. So we get a consent, do a video call. And all of that is actually done in the background. For example, the livening test, because AI is actually doing interview with you, having a dialogue. And the AI will know you are real. So you don't need to do that silly thing, we know you're live. And also the face recognition, AI will zoom into your, let's say, Annie, can you hold up your ID or passport? AI will zoom into your passport ID, copy the picture out of your ID, and then run a face recognition in the background, compare, right? And also the OCR will zoom in your passport, read all of that. Another good thing is, I think you mentioned in the last panel these days, how do you handle deepfake? Recently I think there's a case in Hong Kong, a British substitution in Hong Kong. They have a Zoom call, whatever call, and then they think the CFO is giving instruction. They wow, I think 200 million Hong Kong dollars, whatever. Because human eyes sometimes cannot detect it's a deep fake. But maybe it's easier for AI to detect AI, right? So just to think about that for a minute. I mean, you all obviously heard about GPT-0, right? GPT-0 is trying to detect GPT. We have 160, a lot of micro expressions. So a lot of those things, it's a lot easier for AI to do, right? So I'll stop there just to give you a real life example how we apply AI in this, what we call a smart interview kind of scenario.
Very good. So I'm going to move to you, Guy. What gives the Abolitz family the motivation to start ADI? Start with that first.
Okay, I think that's an interesting question. Thank you, Prof. Manny. I think similar to Raja, we wanted to own our own solutions IP. And I think we were very much, in some cases, at the mercy of different vendors. And I think what we found, particularly if I look at Union Digital, our digital bank, similar to many of the other digital licensees, the challenge was how do we get new customers, how do we fire up deposits, and how are we going to be one of those faster fish, particularly if we're smaller.
And the family owns a bank, right?
Correct.
The Union Bank of Philippines.
Union Bank, which is trillion pesos, and Union Digital, which is our digital licensee, as well as some rural savings banks as well. But I kind of wanted to, I was just listening to Matthew, and I wanted to say something different. Otherwise, it's going to be like a mirror conversation. So I think some of the biggest challenges we had as a conglomerate, when you are looking at data science and transformation across very different industry verticals, specifically banking and power, and then if I take our food business, we're very big in mills, pigs, and chickens from farm to plate. Yep. So you have very different levels of data maturity. So actually one of the biggest challenges we had when we were going to be the data science transformative team was how do we democratize the data sets across the group, as we were literally, it was like legal insanity of sort of data protection agreements between the sister companies going back and forth, back and forth, back and forth. So the first thing we did was actually launch a secure data access and exchange platform so that we could fundamentally, it's still a zero trust environment, which I know is a bit of a catchphrase, but the thing that we liked is that you can subscribe to different data sets from different industries, which has allowed us as a perhaps smaller and faster fish in digital banking to look at things particularly from an inclusion perspective of alternative scoring. So one of the challenges we found with our traditional banks is in MSME banking, we had run out of the traditional customer profiles that meet 5 Cs. So we launched alternative scoring based off POI data. And what we've been able to do, we call it now Banking on Power, where we, at our own cost, deployed smart meters through Aboitiz Power Distribution. And we can actually then model the health of some of those businesses through the electricity consumption, like it's a restaurant and your fridge is being opened all the time, all of the gas stoves are on, air conditioning, etc. So we could then make better inferences and had better insights about the health of those businesses than our competitors. And we're now also, as a very specific use case, an operational cost that we have in power is people don't pay their utility bills. And the debt is actually very small nominal amount, but you have a very regulated approach to collection, disconnection and reconnection, which is obviously a lot more than the debt. So we actually started modeling using our financial inclusion data sets, the ground truth repayment data of good payers and bad payers. And we can now offer small bridging loans to address those people before they go into debt. And we then also assisted in automating the collections process. So we have machines that say the best time to get hold of Matthew Chen is at this time through this particular medium, and that's reduced our OPEX on both sides. So that for us is the holy grail, where we want this cross-pollination between the different verticals. That's what we're here to do.
Very nice. So this must be fully owned subsidiaries within the conglomerate?
Correct.
Because otherwise you wouldn't feel comfortable sharing the data.
We see that as our secret sauce, but similar to Matthew, one of the big projects we're working on now, we call it scoring as a service. So we identify large companies that want to monetize their customer data.
Yes.
We build bespoke models. We act as the data processor, scoring partner.
Right.
We score all of those, anonymize them, and then we broker introductions to different lenders who then get to lend to scored leads, not mixed bags of fruit, right, in terms of the usual lead acquisition, particularly for digital banks. And
Yes.
that is outside of our conglomerate.
So I wanted to let the audience know that your curved balls may not just come from digital bank. It may actually come from a conglomerate who actually identified a solution within their own group, and they can also add value to the banking system as another independent player. But it is to build better and to build broader so that the poor bottom 10% of the pyramid could still have their electricity turned on, even if they don't have a banking loan or they don't have a steady job. And I like to call this blended finance, where you are actually helping every human being have access to capital and utilities and education. So many different ways in which there is purpose in financing, and it's coming from all of you in this room. So it's never just about having a banking or digital banking license. But that does not detract from the fact, Raja, that I'm coming to you. You made a statement earlier, you're the first to be granted the digital bank. Maybe give us, the first digital banking license. And you know, what motivated an ASEAN bank from Japan to be wanting to take part in the digital banking scene in Malaysia?
Firstly, I'd like to just correct that we're the first Islamic digital banking
very
bank
good.
licensee. Also, I want to say when I grow up, I want to do what Guy does. There are 5 digital banking licenses in Malaysia that Bank Negara had actually issued with a very specific mandate. And that mandate is financial inclusion. Very specific. So we are not to do corporate investment banking kind of stuff. And for us here in ASEAN, as you know, we have a huge ecosystem, just even in Malaysia, not globally, but just even in Malaysia. We have the supermarkets, we have logistic companies, we have a credit company, we have entertainment, we have all sorts. So the initial push was to further our ability to service our customers within the ecosystem. We have a credit company, so we do lending. We have people who buy stuff from us. We have suppliers. And like you mentioned, the top 80% of those suppliers are all well banked. But what about the 20%? You know, that auntie that actually provides and sells nasi lemak or the cakes to our supermarkets, they don't get any financing. And at the core of ASEAN's principle is customer centricity. This is ASEAN's big principle, customer always. So the idea of bringing a bank to the ecosystem is so that we can wire the entire ASEAN ecosystem better for our customers, for our business partners, suppliers, our auto dealers, our merchants. So that is the real idea behind it. Then came, as we were building this, was the need to become technologically independent as much as we possibly can. And to that financial inclusion mandate in Malaysia, there is a daunting 90 billion ringgit gap for micro SMEs. And there's not want of money in this country. It's just the inability of the incumbents in doing a credit assessment of the guy that sells burger at the burger stall. We don't know how to measure these guys. And for the, and similarly, that is what drives us. We're building an alternative credit scoring model using data from within the group. So very similar to Guy, as we have a very huge group, we can pull data from within the group to create this. And over time, I hope it gets better. And like I said, as I grow up, I'm going to start selling like him, scoring as a service. I want to do that too. So that is really, and within ASEAN itself, like in Thailand, for instance, we are the largest non-FI credit card issuer. There's a lot more that we can do. We're not dependent on somebody else's card platform, which we do today. And this is pretty much old on-prem kind of stuff. So that is a drive for us, servicing our customers in Malaysia and also in the region for all our financial services company. And hopefully, I don't know, maybe one day we can just export back our technology back to Japan. Who knows?
Very nice. So the mission is very clear. Prof. Chin, are you happy with that? The fact that, with Islamic finance and banking, there's a big population. Now we have a bank like ASEAN Bank, all right, fronted by Raja.
Okay, before I come to that, I have to talk something about technology first, because I'm also a member of Engineers Malaysia, Board of Engineers Malaysia, and then a member of this Board of Technologies also. I also got qualification in finance, economics, law, accountancy, so I'm a mixture of finance also, mixture of everything. So talking about this, before coming to your question, I had to highlight certain things. Just how I was mentioning, this a fast fish will eat up a small fish, because you know that these companies or banks who embrace this technology must be fast. If not, it will phase out, because now you cannot go for incremental changes. You must go for transformational changes in order to what I call to follow the changing technologies in the market. That's why you can see some of the companies that cannot keep up to the technologies. Like last time you see, we got the Nokia handphone, we got the Motorola handphone, and got the Ericsson handphone. Nowadays you cannot see. All replaced by this iPhone, Samsung, this Huawei, Xiaomi, Vivo, and this Oppo. That's why these technologies is different from other businesses. You must able to sort of embrace the technology. If not, you will be phased out just completely, not like last time during the production economy, maybe your market only affected maybe 30%, 50%. Nowadays, no such thing already. Either you are in or out. So that's why for banking, you must digital or die. There's no other way. That's why I say in 15 to 20 years' time, you don't go for digital banking, all this physical bank will be wiped out also in one day. So coming to your question now, so you're talking about this, just how you asked the question again.
It's okay. So pass the mic to Henry. Pass the mic to Henry, because I'm going to draw on that last point. So great that Macro Kiosk has been around for over 20 years as well. And I love it that the brothers are still building. But Prof. Chin just said technology is moving very fast. So how did you keep on leapfrogging and remain relevant in this space?
All right, I'll remember that question, but but basically, just to share a little bit in that sense, I just got back from Barcelona, so it was to attend an event called the Mobile World Congress. So Macrocus exhibited in that event, and the Mobile World Congress is actually the largest technology exhibition in the world. So we have about 100,000 visitors and 2,000 exhibitors around the world. It's very clear that there's a lot of technology, and like Matthew mentioning about AI, almost every other companies there talk about AI, right? And many other technologies as well. Coming back to your question, why I bring this in the sense that Macrocare's perspective, while we are looking at technologies, we learn technologies, we also develop different kind of technologies, or play around technologies in that sense. But I think it's also about making sense of technology, in the sense of how are you going to use this technology to actually humanize solutions or humanize services. And I think that's where Macrocare comes in the perspective where we are not just saying that you must implement AI, but you must implement AI in the sense that it must make sense to your business. Not simply to improve your business own efficiency, which many companies are doing that. It's also about how to then your users, your customers, can leverage on those technology to access to your services. And I think that's the part where digital banks are really good, and of course why companies are having digital arms, like for example, Aboidis, for example. I think the clear idea is about saying how can we then use technology to bridge the people rather than just technology for their own use, right? And I think that's the part where why Macrocare we are obviously looking how we can use technology. Like my brothers always say, technology is great, but the usage of technology is even more sexier. I think that's the key part where I think many, like say banks, for example, if they are here, or any of the Fintech or digital banks, for example, the key part is about implementing the best technology, yes, but also making sure that technology improves inclusion of your customers into your services and into your technology. I think Macrocare is keep on doing that. I think that keeps us alive for the past 23 years, where people know that, okay, we come to Macrocare, it's not about technology. It's about having our users, having our customers able to access our company using the technologies that they have here. Thanks.
Very good. Thank you very much. Kirida, so in our first panel, you know it was a great thing that you're doing for that 1.7 million customers, yeah? Do you build the credit scoring within, all right? Or do you work with other credit scoring partners looking at unstructured data?
I think that's a great question, Professor Annie, because at the moment, we are using data from our National Credit Bureau, right, as the main source of credit rating for each of our clients.
That's interesting. So you mean there's a National Credit Bureau, NCB, in Thailand?
Yes.
And they have scores on every individual?
Yes, who have taken loans from any commercial bank or
but if I have
bank.
not taken a loan, if I'm a young married couple and I want to get a loan, and I have no scorecard?
If you have no scorecard from before, then it's very difficult, right, for banks to assess your risk. So what we're actually doing at the Government Housing Bank, which I also want to share, because I think transformation is not only within the bank. If you can use technology, as both Guy, Raja, and Henry mentioned, to help transform our clients as well, we will have more potential clients. So what we're doing at the Government Housing Bank, and because we're a state bank, we are actually trying to get more people, to use our app so that we can actually improve their financial literacy and have records of their savings and also of their expenses. So that's an alternative data that we're actually trying to correct. So this is actually just an example of a program that we launched a few years ago. It's called mainly like a financial literacy school. So those who come to try to get loans from the Government Housing Bank and are rejected because they don't have enough savings or regular income, what we do is that we ask them to join this program. So each year we have around 2,000 clients who join the program, and the program is for a year so that they get financial literacy, and also they get to use this app, which is the Government Housing Bank's app, and they will try to save each month, and we tell them it's an incentive, right? If you are able to save X amount each month for the next 12 months, come back to us, and we have your data now. We will, reconsider your loan application. So I think using technology to also influence the behavior of your potential clients, will give access to those who are now underserved or even unserved. So that's what I want to add.
Perfect. So now I come to the elephant in the room before I open to the floor for questions. So we all need data in order to get a better profile, to understand the buying behavior and everything. But data also belongs to the individual. So how do you get consent from people? All right, because you tell them that it's good for them. So in the case of Dr. Kirida, they have an app. It has a trust element. They trust the government bank, and they are willing to get into that app because it will help them get a loan. So the end point is critical. So my question is, do you need data consent? And I know in China, it's a very different ball game, but you'll talk about that in a while. And how do I ensure that my data is secure? So the cybersecurity question. Any one of you, jump in. Guy, take the mic.
I'd love to. So I obviously come from a financial crime and compliance background. So this
Yes,
is,
I forgot.
this
He
is
was
somewhat,
once
this is somewhat important to me. Yes.
financial crime policeman.
Yes.
Yeah.
So I think in the majority of cases, the consent is self-explanatory. So obviously it depends upon the explicit purpose for the data. I think we have all discussed for access, accelerated access to finance or financial inclusion. Like, candidly, consent is not difficult to get because you are explicitly looking to use this data. Where it actually becomes quite challenging is when it's in a, if I simplify the language, a non-obvious or a non-associated data set. So if it is your electricity consumption, that's when we've actually had to overcome more challenges around people asking, why are you using this data? If you apply for a credit card or a mortgage application, it's implicit in the terms and conditions. I share my data, blah, 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 for the express permission of, credit scoring, et cetera, et cetera. But it becomes more challenging when you're looking at other data sets that aren't necessarily part of this. So we've actually had to, as a group, start rolling out updated terms and conditions and consents. I wish I had a better way of doing it, but it's kind of opt-in on some of these, and we don't always get a yes. Specifically, for example, with our FX business. So for overseas workers, they send money back to the Philippines through PetNet. And that means in some of the most rural, underserved communities, we are literally the only show in town, which is, an uncle or an auntie sitting in a booth. And that's where you would get your money from your overseas family members. So what we've started to do is model the amounts of money that they're receiving as a proxy for income to then go, here you go, you can now fill in this iPad at the kiosk. But that has been quite challenging from an educational perspective. Like, why would I need this and what are you using my data for? Because I think in some cases the consumer doesn't always know. So it's actually for us been the education has been a bigger challenge.
Yes, sure.
I think it's based out more on necessity. Let's say you're applying for a credit card, you have to give all the information. You want to apply a loan, SME or any loans. Like government one, let's say you want to get the, what I call the assistance from the government, you got no choice, you have to put up the data to them. If not, you can't get the assistance, all these things. I think mainly based on necessity, there is a main part. Of course, the trust is one thing. Second thing is, what I call, the first one is necessity, second thing is trust, I would say. Because if you need it, you got no choice, you have to give the information to them. If not, you want to say, you want to get the information only from the public, it's not easy. If I give you the data, I don't get back anything, why should I give you the data in the first place? I mean, business sense, okay, thank you.
Thank you. Raja?
I just have one thing to say. In Malaysia, we have been trying to move the open banking mandate. So there is a framework that the central bank has already drawn up. Unfortunately, the larger banks don't want to participate or support this initiative. I can understand why. When I was in a big bank, you hold on to this data as being yours and proprietary, and you don't really want it to go out to everybody else. But I think it's inevitable, and I think the conversation with the central bank is they probably are going to mandate it so that everybody would put in. But comes to then who is going to manage this data? So, the discussion is it ought to be a maybe government-owned agency that will control the repository so that you would know that your data is safe. And also only those who contribute to the repository can actually use the data in that repository. So my hope is that once that is mandated, it'll be a lot easier for us to truly reach out to the underserved and the underbanked. Because in this country, 93% of Malaysians are actually banked. They all have bank accounts. but they can be very credit thin and bureau thin. So they may not exist in the credit bureau, but they actually have bank accounts. If we have access to the behavior, and you could see the cash flow moving through their bank accounts, as well as telcos, so we're also pushing for telcos to become a part of this, because we see in Singapore, telcos are also now held accountable with regards to money movement and scams. So they're now held accountable, and not just the banks. So this is my hope and my wish when you talk about management data. To your fear, Prof, is that if there's a government central agency that controls it, you give permission, and so that it become easier for you to actually get financial services by any of the financial institutions in the country. So I really hope, and I call upon all my brothers and sisters within the industry to be more magnanimous and for everyone to actually support this agenda.
How does China do it, Matthew?
Okay. There's a general perception when you talk about China, there's no privacy in China, right? So that's why, I don't know, a bit discriminative actually. But you think about it, you really think hard about it, right? We as an individual consumer, we always are on the receiving end, we're on a weekend, because bank can always get away. You always give your consent. You think about it. Privacy, not privacy, at the end of the day, there's so much information, private information coming out of you as an individual with your blessing. So the real question is how to manage that. It's not whether you give a consent, because you always do, right? So to me, actually, if you look at the flip side of that, China government has done a good job. See, it's about who actually owns the data. Yeah, as if you are the individual who owns data, but at the end of the day, who managed that? So echoing your point, I think government definitely needs to step in. Century, depository, whatever. So I give you another example of, since three of us will have a very large internal data to back us up. There are a lot of fintech companies, virtual companies that are coming out with no data, what to do. I want to give you a real example. We actually have a virtual bank in Hong Kong as well. So 8 banking licenses in Hong Kong, right? Unlike the other 7, we are the only ones say we're going to focus on SME lending. So we're going to focus on a subset of SME cross-border trade. So they buy from China, sell it to the rest of the world, including Malaysia, Philippines, wherever. No data, not like the Ping An Group. So in Hong Kong, no data. What to do? So Hong Kong MA say, okay, since you want to go into that space, we opened up trailing, let you work with trailing. Trailing for lack of a better history, almost like the national single window here. So tapping to the custom data. So just one single data that we utilize alone, alternative credit scoring, we use the custom declaration form. So we lend to, 32% of our customer never borrowed before. So 0, credit bureau doesn't gonna help them, right? And we say, okay, we lend to them. We don't even need to a financial statement. So based on the custom declaration, we know how much they're ordering for the last year or whatever, suppliers, customers, so typical supply chain finance. But these obviously all unstructured data, right? So you need AI, you need big data, you need AI, massage data, pumping to our machine learning, alternative credit scoring. That's how we lend to them. And then, our NPL for the past 5 years, less than 1%. So this is a real life example of one doesn't have the data. Government needs to step in and help and do the governance of data as well. Yeah.
Very good. All right, so my second, data, we need neutrality, management of data. Normally it comes from a government, it's more trusted. Okay, what about cyber? I'll start with you, Henry.
Yeah, I concur in a way, in the sense that, data consent, if you talk just to write a little bit back in the sense, where I think we have given consents to many things. I think we as far as banking solutions or banking services, we'll give a consent, right? If I want a credit card, I'll give a consent because I want a credit anyway, right? But I think that's not from what I see after our, we have done many businesses with many companies, in the sense that the main concern now is not about getting the consent. The main concern now, coming to the point, how are you going to use my data, and how secure is the data that I'm giving you, right? And I think that's the key important part of it. And we can see that, technology plays a very big part in this area in terms of how we can secure your data. We can talk about firewall, we can talk about whatever stuff there is. But I think there's also one angle that's missing out, is then how we can humanize this in a way where we need to teach people how to secure themselves as well. I think at the end of the day, a lot of scams now, they are there are some banks or some central banks saying that there's a failure of technology to protect the data or protect scams from happening. But from my perspective, it's not just the angle of technology, it's also the angle of users' literacy. Because a lot of scams now that's happening really comes to the point of users are not knowing they are being scammed, or they use the fear tactic or the cheating tactic, but not the technology per se. So I think what I would put in a sense that it shouldn't be blamed upon technology as a way of failure of protecting scams, but rather that the outreach would then be needs to really have cyber security literacy, not just financial literacy, but
good.
financial security.
Very good. Yes, Guy. Cyber security literacy. I think Prof. Chin will start another project on that.
I just wanted to share a reflection. I think it's also about the use case for that specific data. And I think, to be fair to Singapore, they've done quite a good job in outlining principles for fair usage, right? Like, what's the potential for harm? I actually think the bigger crisis facing, I think, the lending industry is around some of the decisions that are made off the back of some of these AI lending models. And to me, I cannot currently see the framework for if, for example, Raja applied for a loan and was approved, but Matthew was rejected, like the impact on Matthew, his livelihood, his etc. Like, I think what we are facing is a growing sense of unease as to how these decisions are being made. And I know there's increasingly, which is something we're quite passionate about now, we call it sort of like regulated development, really. So we're looking to try and make our AI decision-making models transparent, ethical, and fair, looking at things like gender bias, for example. I think actually that's the bigger issue, as opposed to there are going to be data leaks. And with the greatest of respects, I know we have some government representatives in the room. You know, governments are no different in some cases from other corporations in their levels of security. Some of the most high-profile hacks have been of government data. So I still think, you know, that unfortunately for us is just the world that we live in. But I'm more worried about how we look after consumers that are perhaps unfairly discriminated against through some of the models that we all think are rather wonderful and do things that are very different. But how do we start a culture of managing that potential bias? For me, that is actually the bigger crisis that faces the financial services industry.
Thank you. I'm going to turn to the audience. I've been told the governor is coming soon. And yeah, and I don't want to stand between you and lunch. Again, grab your microphone from the audience. Anybody? Yes, I have a hand there from a lady. Go to the mic nearest to you. Very good. Thank you. I'm very proud of all the women in this room. International Women's Day on tomorrow.
Hi, this question is for anyone basically. As mentioned in the previous panel, in order to convince customers to adopt digital banking, trust is vital, hence cybersecurity, it goes hand in hand. So Matthew mentioned that scamming using deep fake it's used to scam customers. So hence he said AI is needed to detect AI. So, and he used the example of GPT-0, but as I know, it's more of a text, text, not voice, right, to identify scamming AI. So I'm asking, do you know of any movements in the tech or cybersecurity industry focusing on using or developing this kind of software, AI to detect AI, and other banks exploring this as well to protect its customers? Thank you.
Matthew, thing is for you.
Okay.
And Guy can chip in.
Yeah. I mean, you know, I guess the scammers and fraudster day is moving as fast, actually probably, in my opinion, faster than all the banking technology, right? So deepfake definitely is AI technology, and then it's very easy to fool human eyes, right? I mean, GPT-0 is just an example. You know, in a banking scenario, should we use AI to detect AI? Definitely, I think. That's why I'm giving example. In our case, we use so-called smart interview. So the one that actually interview the applicant is an AI. Right? So a lot of micro expression, like I said, will be a lot easier to be detected by AI rather than human eyeballs. So I'm just trying to give example. And obviously, sometimes through a dialogue, it's also easier to detect. Just like imagine if you are a very experienced banker, right? You know what kind of question to ask to detect. That example I gave in the Hong Kong subsidiary because it's just a one-way street. They are accustomed to receive orders. The CFO saying, transfer this money, they did, right? So imagine if you have proper dialogue, then you know what the right question to ask, then that's a lot easier to detect. So again, human, it's almost like you're thinking about the AI, our AI is it's a technology plus a human brain inside the AI. The combination of that as experienced banker, but with AI technology, probably it's easier to counter the so-called deepfake kind of technology. That's really my thinking, yeah.
Guy?
Thank you. I'm not going to talk anymore. I think Matthew has been very eloquent and elegant around the kind of deep fake issue. I think a lot of banks are using AI, particularly we're looking at banking. Banks have always monitored customers' transactional behavior through different engines, usually rules-based engines, and I think now increasingly we're seeing these hybrid approaches. And for me, it all kind of starts with customer segmentation, proper customer segmentation. So based on the dynamics of how Guy's behavior, his spending habits, his money's coming in and out, etc., not based off static data sets like my age, my income bracket, etc., etc. So I think increasingly we've actually had quite a lot of success in being able to map and identify what we think are scam-like or mule behaviors in our accounts. Philippines, I would say, without being unkind, after karaoke, scamming and fraud is probably the second favorite national pastime. So we have a very vested interest in trying to address this. And I think increasingly now, what we're able to do is reduce that honeymoon period that you have with a new-to-bank customer that has opened an account online. And similar to what Matthew said, we have all of those technologies that make sure it's a real person. But even if it's a real person, is it a real person claiming to be the person they say they are? And then how does that initial 2-week window of new account activity, how quickly can we detect what we think are lookalikes? So it's actually lookalike modeling. We have ground truth, mule, true positive cases, and we look for behaviors that look like that. And what's, I think, helped from a regulatory perspective is we deploy this downstream of the traditional rules-based engines that regulators are looking at. So that's a very long-winded way of saying that AI is already being used to combat financial crime, be it AI-related or gamification of the system.
Okay, thank you. I saw my MC come up. I'm going to do that final closing round. Sorry, this side. I was hoping that you get a chance to ask a question. So maybe just single sentence from each of you, all right? What are your thoughts about the future of finance and banking, considering all these challenges? What do you want to give as a takeaway of advice to our audience? Matthew.
Again, I mentioned earlier, right? So the moral compass is very important in all sorts of technology. Obviously, we talk about AI now, but who knows where it's come in 5 years' time. So the hybrid of human and machines or technology is the key. To me, human beings should always be in the driver's seat. So, for example, we have a very strong ethical, we call it craft. AI supervised by human being is always the key. That's what I'm saying. Hallucination, definitely no, right? So how you actually make that balance is the key to drive future technologies.
So, but it doesn't mean that the human is perfect, yeah? But at least you have a human touch to the machine, yeah, okay? Guy?
I would say I think one of the most interesting things, and I think it'll actually be quicker than 15 years, it'll be AI programs speaking to AI programs for lending decisions. It won't be human beings calling up saying, I need a loan. It'll be your own AI assistant that will find you the best possible financial offers, which will be speaking to another AI model at the bank. I think actually that's what's we're
So what do the humans do?
We have more free time.
We attend KSI conferences. Yeah? We just send our robot to do everything else. So it's our co-pilot.
But
All right?
I don't see why this is shocking. We've had, like, showing my age, we've had answer machines talking to answer machines, right? Like, remember the old cassettes? Like, my mum and dad used to have one. So you have answer machines, robotic dialing machines speaking to voicemails. Why is it so different or so difficult to consider that we're going to have AI programs looking and sourcing for products, whatever it may be, or services, on behalf of their human consumer, being screened by a bank, an automated bank's AI program, making lending or risk-based decision criteria?
Very good. You really imagine the future for us, Guy. Raja.
I think give 10 to 15 years, I don't think you'll see many more of bank branches in this country or around ASEAN. So it is very important that banks really step up their digital channels. Particularly in Malaysia, when over 60% of our people are actually millennials and Gen Z. So these are digital natives. They don't walk into branches anymore. And they have no brand loyalty. So whoever gives them the fastest and the best user experience, they'll probably swap that way. I think we're still very much in a hybrid environment. And whilst that would serve today because you have your baby boomers and your Gen Xers, but the reluctance to enhance by some, not all, some have really done, some incumbents have got some amazing transformation. Some are sort of languishing. And I think if you don't step up your digital acquisition channels, I think you will literally lose relevance and probably not be in existence 10 years from now. So we have to look at the millennials and the Gen Zs and their behavior because that is the inventory for the future. The Gen Xers and the baby boomers are literally going to expire.
And it's a smaller group of Gen Zs and millennials because all our fertility rate is dropping. Okay, Dr. Kirida.
Yes. Just quickly to say that in 10 years, after hearing all of you in the tech field speak, I'm very optimistic. I think there is a lot of scope for more access to finance. At the same time, on the other side of the coin, there'll be more risk associated that comes with digitalization, which we will, of course, have to manage. But in the end, I just want to say that with all these, transformation and digitalization, I just want to bring it back to talent. That we actually have to give more importance now to upgrading the financial literacy, of the people who are users, but at the same time, also the skills of those who are in this field as well, especially in banks, so that, we can live together with technology. Thank you.
Thank you. Henry?
Just a quick one. I think do not fear technology. I think technology has helped human lives better and also help enterprise makes more money. I think so in 10 to 15 years' time, if you want a better life and companies that are more profitable, do not fear technology.
Prof. Chin, one sentence.
Okay, I think the biggest challenge to this physical bank is not the digital technology, it's the culture itself. So I think this one, how this physical bank can overcome this resistance to change is very important. That's why I say in 15 to 20 years' time, most of the physical bank will be replaced by digital banks, and those don't want to be replaced, either you digitize or die, that's all.
Ladies and gentlemen, can we put our hands together to a sterling panel? All right, and they were very accommodating, allowing me to manage them in terms of timing. Thank you, everyone, and over back to you.